Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and the idea that time is on our side and why I do not yet think we are at a market cycle top. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we're going to go through 3 different charts. We've shown these charts before. I just want to show you guys an updated version of them so that we can take inventory on where we currently are in the current market cycle. So the first chart shows the market cycle ROI if you measure it from the halving of Bitcoin. Okay, so we've shown the chart many times from the market cycle bottom, which we'll show after this one, but this one I know a lot of you guys like. If you measure the ROI of Bitcoin from the halving, it still seems very likely that we have a ways to go. And you may note that from the first halving to the second one, the return on investment did diminish. Okay, so again, I know there's a lot of people out there that like to say that the returns are not diminishing, and yes, there's always a chance that this cycle they will not diminish, but we cannot argue with the data that suggests so far, historically speaking, the returns have diminished. And again, we have very few data points, but those data points, that is what it suggests. And from a fundamental perspective, it makes sense that it would take a lot more money to move the market capitalization that same amount in terms of ROI from the halving, because the market capitalization of Bitcoin is going up so much from one market cycle to the other. So after the first halving, Bitcoin did a modest 100x. After the second one, it did a modest 30x before going into these major moves to the downside. Currently, we're looking at a 7x. Now, you might look at this and say, 100x to 30x, that's a pretty big drop. And I would agree that it is. And currently, we've topped out at about 7x. I do think we have a ways to go. Now, you might look at this and say, all right, well, this is approximately a division by 3. Maybe a little bit more than a division by 3, but we also cannot necessarily say that each one will be divided by 3 or 3.3 or whatever it ends up being from each cycle to the next. We also note that the peak in terms of days after the halving increased further out. Again, we only have 2 data points, so it's nothing we can necessarily take to the bank, and we should be somewhat flexible on. But the peak after the first halving actually happened right around the current time where we are at our current cycle. But after the second halving, we still had, a couple hundred more days. So the idea that we can make decisive extrapolations from 2 or 3 data points, I agree, is a hard case to make, but we can also see that as measured from last cycle, even at this point, we didn't reach this ROI for another couple months as measured from the last halving back in 2016. And even once we did reach it, we still had several months to go. So we did a 100x, we did a 30x, so far we're up 7x. If we were to go to say, if we went to 10x, then we'd be looking at an $85,000 Bitcoin. If we were to go to 20x, we'd be looking at, $170,000 Bitcoin or somewhere around that ballpark, getting pretty high up there, close to $200,000. The price of Bitcoin at the halving was around 8,500 or something like that. So it was around that level. So 100x, 30x so far, we're looking at a modest 7x. I still think we have a ways to go in terms of the market cycle ROI as measured from the halving. If you were to multiply this one by 3, it would only get you to 21x. So it seems like even with a conservative estimate or a conservative extrapolation, it still seems like we should have a ways to go. Now, if you look at it from the market cycle bottom, which this is what we have here, we can also see that the returns have been slightly diminishing from one cycle to the other. But even with diminishing returns, so even if we account for a conservative constraint with the idea that the returns should diminish, it still seems likely that we have a ways to go when looking at the market cycle ROI of Bitcoin as measured from the market cycle bottom. Now, the returns might not look super diminished from this cycle to this one, but it's also because we use daily data. When we show it on TradingView and use hourly data, or wicks all the way down on the minute time frame, we actually get the ROI from the first cycle is actually several times higher. It's just when you measure it from daily data that it does look a little bit closer, but it also is somewhat deceiving because this is a logarithmic scale. So this would be 3, 4, 5. This is 600x. The next one was 500x. However, if you use some hourly wicks, this one doesn't change a ton, whereas this one goes up a little bit more. So if we look at it from this perspective, we can say, all right, first cycle peaked here at 600x. After 200 something days, second cycle peaked at around 500x. After 700 something days, third cycle peaked at around just over 100x. After maybe 1,050 days or so, currently we're not even at 900 days. We're not even at 900 days. We're approaching it, and we're still only putting in less than 20x right now. We did hit 20x not too long ago, but so far we're putting in less than 20x. And so I think that the market cycle ROI should go up more than 20x this market cycle. I feel like conservatively, I would say 30x, which would put us closer to 100K, and that would be my conservative estimate for the entire market cycle. Now, that doesn't mean we can't have corrections between now and then. Every time Bitcoin pulls back 30% or something, then it might make people think we're at a market cycle top. But we also have to remember that we could get 40% corrections or 50% corrections and still continue along the way, just like we did in 2013. This was like a crazy correction. I mean, it took us from 100x back down to 30x, but by the time the year was out, we were already back up at like 500x, going up another 5x or so from the prior local top of that market cycle. So we look at our current cycle again and we say, hey guys, we're still ahead of schedule. If you measure it by hourly timeframes, we're actually right on par with it. But even on daily timeframes, we're right on schedule with the last cycle. So if anything, things are even more bullish than they were at this time last market cycle if you measure it from market cycle bottom. Now, to go up and put in a non-diminished return cycle, we would need to go to approximately $300,000 or $310,000 by the end of the year. I think it's going to be very challenging for Bitcoin to make it there, and I do not think it'll make it to $310,000 by the end of the year, but I would contend that, hey, we could cool down for several months and still be doing exactly what Bitcoin's done for years and years and years from prior cycles. And I do think that the evidence suggests that the peak of this cycle is still a ways off, and is likely not going to peak at 800 and something days after the cycle bottom, when the last one was at well over 1,000 days. Now, again, extrapolating from 3 data points is somewhat dubious, but this is just what the data suggests so far. Obviously, if the trends change, we'll take that into account, hopefully in future cycles, but all we can work on right now is what we currently have. From a fundamental perspective, it would seem kind of strange for it to peak out at 64K in terms of the grand scheme of the market cycle, and I think a lot more institutions need to come into the market and will likely drive the price much higher. Right now, it seems like the probability that we're at a market cycle top is very low. The probability that we could be at a local top that we consolidate from for a few months is maybe a bit higher. And again, finally, we'll look at our total cryptocurrency market capitalization. We'll do a full video on this here in a few days, but just looking at our total cryptocurrency market capitalization and recognizing the percent difference from the market cap of the entire asset class and the fair value regression trend line. It looks like we have nothing but time, right? Nothing but time. We're currently putting in, this is a few days old, so we're still putting in some rookie numbers. I think right now we're closer to around 400% or so, but we still have a ways to go in terms of reaching this upper trend line, which should be above 8 to 900% overvalued from the fair value regression trend line, which we still have a long ways to go. Don't sweat the short-term price movements in the market. They're going to happen. Corrections could present opportunities for people. Just make sure you manage your risk accordingly. And remember that in the grand scheme of the market cycle, while we can easily experience dips along the way that can shake you a lot more than you might think, and we could have dips coming that could even make the prior dips look like nothing, it does not mean it is yet the end of the market cycle. I think we still have a long way to go. I think that those who are patient and just sort of keep riding the wave for years to come, or I mean even for months to come. Obviously predicting short-term moves is a lot harder in the short term, so it's hard to say for months to be completely sure. But those that stand the test of time and that are patient, I think, have the most to gain in the grand scheme of the market cycle. And I personally think we have a ways to go. It's not financial advice, and I will be the first to say that if anything, the main thing that stands out to me so far this cycle is that the corrections we've had have been somewhat tame. So don't let major corrections scare you. We haven't even had a 40% correction this cycle, and we had 2 or 3 of them last cycle. I wouldn't even necessarily be fazed by larger corrections than that. So time is on our side. I feel like we have a long ways to go. The charts as measured from the halving, as measured from the market cycle bottom, as measured from the total cryptocurrency market capitalization, logarithmic regression trend line, and the fair value or the overvaluation extension from the fair valuation trend line, all suggest that time is on our side. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. And remember, we have the premium list at intothecryptoverse.com if you're looking for exclusive content, the weekly reports and videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard, the Into the Cryptoverse app, the first Into the Cryptoverse NFT coming very soon, and a few more things. Make sure you guys check it out, intothecryptoverse.com. If you pay with crypto, you'll get a discount of up to around 15% or so. Thank you guys for tuning in. Subscribe to the channel. Let's go for 350,000 subscribers. And looks like you're falling out of the Cryptoverse. We'll see you guys next time. Bye.